The 14 lenders in this year's survey, high street names, regional building societies and specialist lenders, represented 53% of gross mortgage lending in 2014. So, what did we find out? The standout theme has been the way the first year of the mortgage market review has impacted the whole mortgage buying life cycle. The entire system has been affected from application process through to offer and completion, with lenders facing challenges in sales interview times, process changes and distribution. We envisage three principal areas that will have an impact on the mortgage industry in the next few years. Mobiles and tablets are now an ever-present feature in modern life, with 3 in 4 adults owning a smartphone. As a result, there's a demand for the internet, mobile devices and financial services to converge. Competition for introduced business will be high, and brokers are looking for a frictionless service across mobile, tablet and the desktop. Challenger banks typically have a lower cost base through digitalisation, and without the constraints of legacy systems, challengers can adapt and change their lending models almost at the flick of a switch. The most notable findings in this year's survey are distribution. Intermediaries dominate the route to market. 78% of mortgages were introduced by intermediaries, a year-on-year increase of 22%. Lenders such as Tesco Bank and HSBC are starting to lend through intermediaries after years of being direct-only sellers. And branch sales have dropped 7% from 2014 to just under 16% in 2015. 85% of lenders have seen an increase in lending volumes to intermediaries, and 69% expect broker numbers to increase in the next 12 months. But efficiency has been reduced. The productivity of each employee engaged in offers and completions has dropped by 42% and 41% respectively, driven by increased manual processes and restrictions on automation and straight-through processing. There is still work to be done on the use of digital technology. Take-up among lenders in services offered via smartphone and tablets remains limited, with most only providing research and affordability services. Going forward, many lenders plan to offer interactive mobile services such as affordability calculators and case tracking.
I think the mortgage market review has been good for intermediaries. They've seen their share of the mortgage market growing. I think they're in a very strong position at the moment. Remortgage market looks as though it's coming back a little bit. I think there'll be some opportunities in there for both intermediaries and for lenders direct.
I think the main opportunities are dealing with some of the innovation in the market, particularly around some products around interest only, lending into retirement, and also how to tie that into the digital world that people are becoming accustomed to.
The large number of intermediary applications that didn't get approved in the first instance, but then the way they'd reworked those to make sure that intermediaries have a much greater acceptance rate than branch and telephone distribution channels. So that's a really big finding out of this that I think shows the value for consumers to go to an intermediary and therefore get the right mortgage product at the end of the game.
The main driver will be the consumer will lead where everybody goes, and at the moment I don't think there's an overwhelming need for the consumer to have the level of technology that's potentially going to be available at the moment.
The market, broker and consumer demands will change, and the winning lenders will be those that preempt those changes and act now. For a copy of the report, click on the link below.